Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth. What's up, guys? Mr. Fit to Flourish here, and today I wanted to talk about how to determine the direction of a stock. So how to determine, hey, is the stock going up? Is the stock going down? I keep getting a lot of questions on TikTok on, hey, what do you think about this stock? Hey, what do you think about that stock? So just pay attention to this video, and you'll be able to determine where a stock is going on your own. The point of my videos is to help everyone learn how to trade on their own, instead of relying on like some guru people or furu people. But a lot of the stocks that I mentioned on TikTok, they go exactly as planned. And the reason is I read Wall Street books. I don't go on YouTube to look for some of those people trying to like scam you into like Discords and stuff. But anyways, pay attention here. Let's get right into it on how to choose, how to determine direction. All right. So let's get right into it. So we're going to take a look at NVIDIA because everyone keeps asking me about NVIDIA. Not only NVIDIA, but other stocks as well, but mostly just NVIDIA. How do you know where a stock is going to go? How do you know if it's going to go up or if it's going to go down, switch directions? The first thing we need to understand, and there's a lot of stuff on my screen here, so I'm just going to clear everything. The first thing we need to understand is we need to understand candlestick, Japanese candlestick charts, okay? So these are called candles. Each bar is called a candle. They're bars or candles, but really just candles. Candles have things called wicks. Wicks are the lines. So this is a wick, this is a wick, this is a wick. All right. Wicks are the lines. And what are the wicks? The wicks are basically showing you that price actually moved up to those extremes, but then got pushed back down if it's on top side wick, or price got pushed down to this low extreme and got pushed back up. Okay. So there's two different kinds of candlesticks. All right, there are trend candles and non-trend candles. All right, trend candles and non-trend candles. So what is a trend candle? It's pretty much just like a big bar that contributes to the direction of a trend. So this is a big green bar and it's contributing to the upward movement of this uptrend here. And then this is a big red bar. It's contributing to the downward direction of this downtrend here. Now, non-trend bars are really small bars, like these tiny bars here, this tiny bar here. It doesn't contribute to any direction of a trend. Okay, so when I'm looking for direction, I'm looking to see, hey, are we having trend bars like this big red bar, this big red bar? It's showing me that there's a lot of downward pressure. And then when we get big green bars, it's showing me there's a lot of upward pressure. Okay, that's the main basic thing that you need to understand about Japanese candlestick charts and reading a chart. So people will just be like, oh, like, I don't know what's going to happen. No, you know what's going to happen. Look at this big red bar. This thing's coming down. There's a lot of downward pressure. And then some other areas like this big green bar, there's a lot of upward pressure. Even though we got a little bit of a pullback, we're continuing to go up. Okay, there's a lot of upward pressure. Okay, so the size of the bars will tell you how much pressure there is in either direction. And that's the first thing to pay attention to. All right, the next thing you're going to want to pay attention to are signs of reversals, okay? Because things will go up, and then all of a sudden it turns around, which means it's a reversal. Or it'll go down, and then all of a sudden it'll turn around, which means that is also a reversal. So there's technical names to these things. I'm going to explain a few of them, and a few concepts to understand when trying to figure out, is something going to go up or something going to go down. I'm trying to keep this as simple as possible because I don't like the videos where people start saying ICT, SMC, volume collapse, blah blah, like they start saying some stupid shit. It gets annoying. I just want it to be so basic that it sounds like 1, 2, 3. Okay, like I said, trend bars are big bars, non-trend bars are small bars, and they don't contribute to the direction of the trend. All right, let's keep it simple. All right, so another way you can tell if something is going to go up or down is, hey, we went up, and then all of a sudden you get something called a micro double top. What is a micro double top? That's when you have a high and then a close and then an open right next to each other. Okay, so a candlestick opens here and then it closes here and then it opens there at the next bar and goes down. Okay, that's a micro double top. So usually that's a pretty good sign of a reversal. But you can see here, we had another open there, and then we rejected there, we rejected there again, we rejected there. So we keep rejecting in this area. So it looks like there's a lot of selling pressure here. Another way to know something's going to go down is when you get top side wicks. That's showing you that sellers are stepping in and pushing price back down. And then this big topside wick right here, shows you that there's a lot of sellers stepping in. Okay, so top side wicks show you sellers are stepping in. So candle size is important, and then wicks are important. Those are the two main things I look at. And when I'm looking at wicks, I'm looking at, okay, at the top of an uptrend, this top side wick is showing me that there's a lot of selling pressure up at these highs. So we're probably going to get a reversal to the downside. And then at the wicks on the bottom side wicks show that buyers are stepping in. Bottom side wicks means buyers are stepping in. So at the bottom of a downtrend, we're probably going to get a reversal to the upside because we have a bottom side wick here. And that's what happens. Okay. And then again, we get these top side wicks, price comes down, then we get bottom side wicks, price comes up. We also have something called a micro double bottom. That's when we have a open here and then a close right at that same area. That's a micro double bottom. Or we could have a close and then an open right next to each other. But essentially, it's a bar next to another bar where they have the same low, like open and close that are the same area. Okay, the wicks don't count. We're looking at where we open and close. Okay, but the wick does show you that price is getting pushed back up to that defined point. All right. And then there's also things like a bullish engulfing bar. So this green bar eats up this little red bar. That's called a bullish engulfing bar. And then this is called a bearish engulfing bar. A red bar eating up a little green bar. So bearish engulfing shows you prices going down. Bullish engulfing shows you prices going up. Okay. So main basic things like that are how to read candlesticks to determine is a price going to go up or going to go down. Now let's get a little bit more serious. All right, we're going to get a little bit more serious. So we're going to hide drawings. All right. So now you're like, oh crap, what's going on? Alrighty. All right. So another way to know if price is going to go up or going to go down is we want to look at our moving averages. Okay, not only the moving averages, but you also want to look at your momentum indicator. So some people like to look at volume bars and stuff like that. I like to look at what's called a volume RSI. Okay, volume RSI. What is the volume RSI? I have a video on this, but it basically shows you when volume is coming in, and when this is curling up, we know we're going to get a lot of volume. That's a lot of up volume. When it's going up, there's going to be a lot of up volume. When it's coming down, there's going to be a lot of down volume. You can see how it correlates on the chart. Down volume here, price is coming down, and then up volume here, price is going up. Okay, so I use that for momentum. So I can literally look at that and be like, hey guys, this is gonna fly. And the people are like, how do you know? Well, I have the volume RSI. I told you on TikTok and YouTube and in the Discord, but you're not paying attention. Pay attention. Anyways, so that's one way. Another way is looking at moving averages. So the easiest way to determine, I'm going to take off all these other moving averages so we can talk about something. The easiest way to know if a stock is going to go up or down is when we get the pink line, my 9MA, crossing the yellow line, the 20MA. If the 9MA is below the 20, that's usually bearish. Okay, but once we cross back above the 20MA, we're going to get a huge upside move. Is usually what happens. And if the 9MA crosses below the 20MA, that's bearish. We're going to get a big downside move. Okay. This is called the market structure shift. So that's when we go from going up to going down, or if we go from going down to going up. So if the 9 is above the 20, if the 9 is above the 20 like it is here, that's bullish. That's how it's supposed to be. The smaller MAs are supposed to be above the bigger MAs. But then if the smaller MA crosses below the bigger MAs, we're going to get a big move down. And the 9 and the 20 is the best one to show you like when a huge move is coming. 9 crossing the 20. Okay, so really good sign of a market structure shift there. All right, and then the last thing I wanted to show, like, hey, how do you know if a price is like stopped going down? We can look at average true ranges. I'll probably save that for another video. I have tons of videos on that. But let me go to this guy here. All right. So this dark blue line is the 200 moving average. Usually if a stock comes down on the daily time frame, a stock comes down to the 200 moving average, that's a moving average that a lot of investors and big money is looking at. So basically when we come down to that level, that is literally the absolute low that a stock will go to before getting bought back up. Because that's a price that the stock hasn't seen in an average price that a stock hasn't seen in 200 days. So of course you'd want to get that. You're getting the stock at a good bargain. okay, a good price. So that's where usually if we get down in that area, I tell people, I'm like, hey, this is coming back up. So when Nvidia got down here, I said, guys, start buying Nvidia right here because this is going to fly. And guess what? Nvidia is flying. And guess what? We also have this 920 crossover coming in. We have earnings coming up in a few weeks. So this is expected to absolutely rip. But yeah, so a lot of these signs are ways to figure out, hey, where is a stock going? Okay, where is a stock going? So we can do a live, let's do a live analysis of a stock here. Let's do Tesla here. Tesla's, I've been talking about Tesla for a while. I've been telling people, hey, it's going here, it's going there. I'm going to use my my ATRs, my average true ranges. I just like to use them. And I will also use my drawings, my key levels, all right? And then I have my volume bars. But this is how I do my analysis, all right? So basically, I told everybody, hey, Tesla is going to be moving to the downside. Also, one thing I did not mention, let me actually hide everything. Hide all. All right. One thing I didn't mention is when you take out a previous low. So as you can see here, this used to be our lowest low. Okay. This area right here was our lowest low. All of a sudden, Tesla broke below it here. Once we break below a previous low, we get what's called a break of structure, where we break that support. So now we're gonna continue down. Okay, we're gonna continue down, and also on the opposite spectrum, if we had a previous high, this was our previous high here. Once we break above that high, that's also a break of structure up, we're going to get a big move up. Okay, so that's another way to determine if a stock is going to come down or go up, a break of structure. So again, this was our previous low. If you look to the right here, we broke below that. So I told everyone, hey, this is going to come down really hard, and we did. All right, we did. So yeah, that is that right there. But let's get back into the analysis here. All right, get back into the analysis. All right, so now what's likely to happen here on Tesla is now it looks like we came down to this low 325.43. All right, we have our moving average, the 9MA here, the 20MA. So we're probably not going to get a huge move to the upside yet because the 9MA hasn't crossed above the 20MA. But it looks like we are reversing back to the upside. We have what's called an inside bar formation. And then we're at the low, the 100% expected move to the downside on this average true range, this ATR. So we sold off pretty hard. So we're going to get this upside move. And what usually happens is when you break a level, we go back up to retest it. So we're probably going to get a move back up to that previous low up here at 378. So it looks like we're moving back up here. We're getting a nice bull bar. And we're moving back to the upside. And if you look at the volume RSI, it's starting to curl up a little bit. It needs to come up into the purple space, not enough momentum to send it flying, but it looks like we're probably going to consolidate for a little bit, go sideways for a little bit, and then make a big move up to retest this low. And then once this 9MA crosses that 20MA on the daily time frame, we'll get a pretty good move up. Okay, let's take a look at another stock. All right, so again, remember I talked about micro double bottoms. So right here, we kind of have like this micro double bottom. We have low here, and just green bars, big green bars here, okay? And then the volume RSI is the momentum indicator, showing me we're getting up volume coming in on Microsoft here on the daily time frame. And we fell out of the sky here. We fell out of the sky. So it looks like if Microsoft holds this level here, it's probably gonna move back up, okay? So anyways, that is pretty much how I determine where a stock is going to go, how it's moving, based on those patterns. Hopefully this helped. This is a little bit, this video is not too long, but basic stuff. You got to keep it simple. You can't keep looking at like all this ICT, SMC, liquidity sweep, like all this these jargon, okay? Just keep it simple. There's big bars, there's little bars. There's a low and there's a high. Get in when you think it's at the low. Get in when you think it's at the high. And it's based on, sometimes you use additional pieces of evidence to show like, oh, it shows there's a momentum here. I'm going to take the chance and go, because it's never 100%. Even if you do an ICT, SMC, ABC strategy, it's never 100%. But when you keep it simple like this, you look for that 920 crossover, you look for some momentum, get in, you'll go with the flow, and you'll get pretty good money. All right. So it's your boy, Mr. Fit to Flourish, and I'm out.